sell-side strategists are starting to rethink some of their price targets for the index and saying you may want to sell for now and then buy later. That's exactly, or rather, what I've gathered from it, because tariffs and the threat of an economic slowdown are going to weigh on stocks. I think Mike Wilson is saying to the tune of about 200 points, and then drive us up 1,000 after that. Let's take a closer look with Bloomberg's Alex Semenova at the desk here at 731 Lex. Alex, great story, and there's a lot. Dubravko is also saying we could see a drop to 5,200 and then a rally back to 65.
Yeah, Matt, that would be another 10% drop, so pretty painful. And he really highlighted a wide range of outcomes for the index, 5,200 to his year-end target of 6,500, just highlighting the uncertainty this year has brought so far for sell-side strategists who going into it were pretty bullish. You couldn't find any bears on the street. The average year-ahead target stood around 6,500. That was about a 10% gain from where we closed last year. And now you're starting to see that optimism being reined in. You had RBC Capital Markets' Lori Calvasina, Evercore ISI's Julian Emanuel coming out and basically saying that the probability of their bear case materializing has just gotten higher. They are still sticking to those targets. And in fact, there was an analysis by Piper Sandler that found that the consensus target usually lags behind the actual market's moves by about 60 days. And if they were changing them at this point, it would just show no conviction at all in the target they came into the year with, but a lot less optimism than we saw in January.
And I think that's such an important point. And I love that stat from Piper Sandler that, like you said, of course, there's a 60-day lag that usually materializes. So this happens every year, to sum it up. But it does feel that this year there's a wider band of outcomes here, that the uncertainty is much greater than usual, especially at this point in the year.
Yeah, we're seeing, wrong way calls happen a lot over the last 3 years, really, given the bifurcation that we've seen both in the S&P 500 with big tech just dominating all of the gains, and now that group taking the index lower. And then, of course, bifurcation in the economy with the U.S. consumer, and that has made it really hard to predict what U.S. equities are going to do. Last year, we kind of saw expectations for a flat index and obviously got a 20% gain. And it seemed like strategists just couldn't keep up with the rally. They kept upgrading their targets. And now we're seeing the opposite of that. Everyone has finally caught up. You went into the year with optimism, and now we have tariff concerns and growth concerns really weighing on those positive outlooks.